then, let's get into today's move and yesterday's trades. Right, we're going to start with yesterday. So, actually, we're going to start with today, which is, Thursday. And as we can see, there was a move that took place, but, it's not in line with my model. It's more of a kind of a soup setup. So this is all yesterday's stuff. You can see, I think it was more on S&P. That made a bit more sense, I think. A bit more bullish that way, actually. So I think it was on NASDAQ. Yeah, so we had this inverse fair value gap from yesterday, or, fair value gap, well, traded up into here. We got a sweep above the high created at 7:45, and we had some standing liquidity at London lows and a PM session yesterday, including yesterday's AM lows. We got equal lows, or relative equal lows here, and we have, does that line up, or does it not go that far? So we've filled this imbalance in here today. So yeah, the move was more of a, so you got inverse fair value gap in here in the 5 minute, we got displacement, and then I think on the 3 minute, let's have a look. So yeah, price retraces up into this order block here on the 1 minute chart. So we go but. So I didn't actually take this trade today because it's not my model. I was just observing to see what we would get. As you can see, prices come up, tap this order block after displacing downwards, and we've gone and taken all the liquidity as mentioned just a moment ago. This happened at, where's the entry, just around market open, 9:35ish, and then take profit would have been 9:45, and then bang on 10 o'clock, we've come pretty much down to the bottom of the move and then started pushing back up going into the PM session. So today, in terms of news, we had unemployment claims, red folder, and I think that's about it. On the S&P, it was more of a bullish move today. So you can see here, we've continued up. Just for perspective or context, yesterday we swept these equal highs here and then seen the reaction down, and now we're pushing up to take the all-time highs on the S&P, which makes a lot of sense as we had already taken the all-time highs on the NASDAQ yesterday even. So what we're going to do from there. What did I actually trade yesterday? Yesterday I traded S&P, and yeah, ultimately I was a bit disappointed in my trading, and I think it's because my setup is a bit more longer term, so I'm not in as many trades, so my tolerance to being in trades isn't as strong as it was. Ultimately, I was pretty hesitant yesterday to actually take the setup as it was playing out, and yeah, I ended up taking, I think, 21 pips. I had one trade 24 pips profit and one trade -3 pips profit because I thought I was in too early and I just closed it. But if I had taken the trade yesterday, it would have been around 8-1, which is a bit of a bummer. Yeah, so pretty much because I hesitated so much, or for so long, to actually get in the move. I was looking at it around here, I think. What was that on the S&P? On the NASDAQ even. Where are we? Monday. Let's just reset this. Is it here? Swipe across camera. Yeah, so we'd swept those equal highs on the 4-hour chart, as I mentioned, and then we got a 15-minute inverse fair value gap. We got the market structure shift here, and from there we got 1, 2, 3 candles. Fair value gap forms here. price didn't trade up into that, but I think on a lower time frame it came a bit closer, and yeah, so we took this one instead, and then I moved down. But ultimately, I think it was the S&P had aligned with this, and I was looking at both of them. Yeah, here we go. So this, I think, was like a 5-minute breaker or a 1-minute breaker even at 9:49, and then we broke down through this inverse fair value gap here. And on the 30-minute chart, the reason I closed my initial entry was because on the 30-minute chart yesterday, if you look, we had this big imbalance here and we traded down into it. Incorrect. No. So we had this 30-minute imbalance here and we traded into it, and the 15-minute closed above this wick here, and I was seeing that as, you know, okay, the imbalance is filled, we're going to now continue up, and that's the end of the move down because we're in such a bullish trend at the moment. But price did actually come down a bit lower. You can see the candle here comes in to fill this imbalance instead. So best case scenario yesterday, we'll go through it. So we had the 1-minute breaker block, tap that, you enter there with your stop up here, and that would look something like this, middle of the breaker. Let's just squash this a little bit. So stops just above the high, and then you target this fair value gap down here. This is a 15-minute fair value gap. Firstly, that's a 4.6 to 1, which already would have been a banger. And then if you went for the other one, as I just showed before, you got 8.9 to 1, which is, it's a bit of a bum up, but you know, I'm not going to complain with taking. I took about 20 pounds profit yesterday instead of like 900 quid, to be honest. So yikes, that it happens, you know what I mean? It happens. It's a learning point. So what was happening was, once we traded down through this fair value gap, we wicked back up into it, and then price then continued to move down even lower, and we were just getting really nice price action all the way down, pretty much. For my liking, there was this fair value gap here they got traded up into, and then it moved down. So that would have been a nice entry. I was looking at this, and it wasn't till like I was still hesitating because of the fact we'd already moved down so much, and as I mentioned, I was anticipating price to move up a little bit more, and I thought the end of the move was near, and I just kept seeing it going down and going down. So there was a tiny bit of FOMO on my part, but I was still confident that we were in the right trend going down. So what did we have here? We had this was the first entry here. No, it wasn't. Where was it? Yeah, the first entry was here with the stop above this fair value gap, and I just closed it. Just not on some smart business shit, like, do you know what I mean? And then, you know, I saw we traded down, and then yeah, we had a mini pullback here into the inverse, and yeah, that's when I went short. And then I was targeting the previous daily low at the time, so that would have, it was a bit unrealistic, and I knew that at the time. I was also looking at the actual time of day. The AM session had passed, and we were in 11 o'clock territory, so it's a bit of a kill zone here, do you know what I mean? And as you can see, price swept. This was my break-even point. I moved the trade to break even, and then as soon as I saw that we broke structure here, we closed above this candle. Was it on the 1 minute? Either way, we pulled back. I think it was this one here, actually, this candle. I just closed it at this line because I felt that that would be, you know, the move up beginning, and turns out I was correct. So, you know, ultimately the lesson here is, when the trend aligns on the higher time frame, take it, because it's a lot more higher probability. And then if you wait longer and longer, it's a lot less lower probability, because like, you look how many pips this moved yesterday. So if we got in here, we would have got in at what, 267, 6267 on the S&P, TP, you know, 6234. So that's like 300 pip move, and you know, it's a bit painful to miss that, but you know what I mean. It's not the end of the day. Still green on the month, still green on the week. We're up 90 quid this month, so yeah, it's not too bad. It's not too bad. Yeah, ultimately the execution just could have been a bit better, and that should cover that for now. And as you can see, since then we had FOMC meeting minutes in the PM session, 7 p.m, which I think is 2 o'clock New York. So around here, you see the news driver put this push up here, and then we just sort of, you know, traded all the way back up to fill in this imbalance, and then everyone that went short up here eventually got stopped out today, I think. Just reset this one here. Yeah, so everyone that got went short here would have been stopped out in the AM session today. So yeah, it's one of those. It's one of those. Yeah, when price action aligns and it seems likely, back yourself. I need to back myself more, because this was the model that played out, and I didn't take it. I mean, ultimately, it didn't go to previous daily low, which is down here. But yeah, like I say, I was looking at price and I was thinking, does it really need to come down here, especially since we have this type of bullish action that's formed all the way like this, and we have already like traded above this. So this was the sweep to then generate some liquidity to push up higher the following day. So yeah, quite a bit to break down. I think that's most of it today, and yeah, I mean, well managed, but you know, it's still a bit of a bummer, really. It is a bit of a bummer. So I just want to see quickly. So let's say I went short from there, which firstly it was a bit early for me to get in, but you know, what can you do? And then say if we targeted this, that's an 8.9 on even 1% risk. So I say what, 22, no, 21, 19 units, 55 quid stop loss to make 489, double that, 36, my maths is off, 38, there you go. £110 stop to make £1,000 pretty much. So yeah, it's a bit of a bummer. I mean, when you could have made £1,000, you made 20 quid. Yeah, what are you gonna do? What are you gonna do? Learn from it. So yeah, in terms of, I'll just quickly go back into the move today that I was looking at on the S&P. What did we actually get? So we traded into this action here. This is maybe an order block on the 15-minute. Kind of. Like, there's not really much reason for it to go lower than this. So we wick down at 10 o'clock, and then up we go to take the previous daily high. And I think we're very close to all-time highs now. So yeah, it's one of those. It's one of those. I'm not going to complain. Yeah, I was just, overall, main takeaway is, I'll just summarize it all again. I'm repeating myself a little bit. The main takeaway is, you know, price action aligns on a higher time frame and across both markets. Back the model, if it is the model that forms, back yourself. Take the trade. You are going to lose some, you are going to win some, but the rewards ultimately do pay out more than the losses when you back yourself and execute properly. When you're being a little pussy and a little bitch trying to, you know, scrimp on your stop loss all the time, your rewards are going to be much smaller. And if you keep doing that more often than following the plan, it's going to bum you. Yeah, it's going to bum you pretty much when you do take a big trade and you haven't executed properly, because your wins aren't going to be there to cover your loss. And that's where being nervous about getting into trades comes from. Clocked it, mate. I've clocked it. Right. So, with all that being said, yeah, that's going to cover it for today. Tomorrow is Friday. I'm not going to trade tomorrow, so just one trade for the week, I believe. No, two trades, three trades for the week, I think. So the first one was short, second one was short. Yeah, so all shorts this week. So they've been counter trend trades, and yeah, so we'll come back next week and we will see how we get on. With that being said, trade safe, trade smart, and I'll catch you tomorrow.